Like, I really enjoy it when a theme has like multiple kind of trends that are supporting it. That's kind of the framework. The things you need for like a successful equity theme are the macro environment has to be correct. You have to have like a convergence of trends in the real world, and then of course you have to have investor kind of interest in the theme. So the last couple things that we published, the most recent thematic kind of primer that we published was on where AI is going to go from here. And the idea is like in 2023, when we published our AI piece, our first AI primer, uh, we went over the idea that you don't know what AI is going to look like in 5 years. But you do know that, or we knew that AI would be a technology that would proliferate and be transformative. So the best way to position for that was AI infrastructure, and that caught on very quickly, and picks and shovels became like the consensus view. And the thing about that is like now we're at the level where we're still going to build AI infrastructure, and scaling laws still are real, but it's kind of like a put up or shut up moment where AI has to start really genuinely generating revenue or margin improvements, and we need to see like a bigger kind of proliferation of use cases, and people and companies actually utilizing it to make real world changes. So that is where we're positioned on AI, and then you get the what we just spoke about, which is anywhere where we're kind of lagging behind China is going to be a focus for government spending, and you know we have pretty big pockets, and there's not insignificant amount of investment coming into the U.S. So that kind of leads to the natural conclusion of like, where do these two things meet up? Where does AI in the real world and focusing on where we're lagging behind China kind of converge? It's in robotics, and that's pretty interesting to me because I've obviously since AI became a thing, it's when you think about 10 years ago, you think about artificial intelligence, you're probably going to end up thinking about like this human robot that's just like Star Wars kind of stuff, right? And we're gonna get there, right? Like robots are gonna be. We are always gonna make more robots. That's a trend that's not going to change. But right now in the market landscape, most companies with upside to robotics are also exposed to the automotive cycle. So how do the automotive cycle has been absolute garbage, and the most interesting thing for me, which is why I've been tracking this theme, is because the best themes are not, it's not just, oh, everyone suddenly cares about this thing, right? The best themes are when you have a sector that is like cyclically screwed and has a secular story that can emerge. Like any company that's close to like a cyclical bottom, or and has gone through a really rough kind of cycle, and also has the potential to re-rate on a secular narrative, that those are the best themes in the world. And we saw that with AI, right? I mean, if you remember, at the end of 2021, nobody would touch NVIDIA because of like the crypto GPU glut and the double ordering, and there were a million reasons why NVIDIA should have traded at, I don't know what it was, 5 times the next 12 months earnings after it, once they actually came in. But then you had ChatGPT in November, and it was like, well, this is a pretty forgiving multiple, and if this is a real kind of trend that people start caring about, that re-rating is going to be amazing, and that's what happens. So the framework is always try to buy secular stories at cyclical prices. It sounds trite, but it's true that's generally where your best returns come from in thematic investing. So with robots, the robotics supply chain is obviously very exposed to that automotive cycle, and we've seen it in the numbers. But recently, you've got Microchip Technology came out, and their CEO literally said the March quarter revenue decline marks the bottom of the downturn. That's a verbatim quote. Infineon said end markets have bottomed. Regal Rexnord it was confident enough to reaffirm their full year guide. They even modeling out like EBITDA neutral tariff mitigation. onsemi said that Q1 was bouncing along the cyclical bottom. So what I see there is this is an area where we are the US is super far behind. Like most of the robotics breakthroughs are coming from China, especially in terms of cost, right? So if you look at like the major players, the China's Unitree has a humanoid robot that they're selling for 16 grand. And I know that everyone's like, this is CGI. It's not CGI. I'm just telling you, it's not CGI. It's real. I've seen it. It's cool. And when you look at that, it's like, okay, well, when a humanoid robot starts like dipping below the cost of like a used Honda Civic, uh, that's a pretty interesting dynamic because while like if you design a robot to specifically mow your lawn, you don't really necessarily want it to be a humanoid. But if you want that robot to be able to mow your lawn and then like come into your house and do your dishes, the world's interaction layer is designed for kind of human like 4 limbs, 10 fingers. It's designed for human interaction. So I think it's a pretty interesting time to position yourself for. You say, well, like the inevitable future is that we will have humanoid robots, and kind of do the same thing with that one would do with the AI trade, which is just I'm going to position for the companies that have upside because right now the valuations are forgiving, and maybe that's not the case in a year. Maybe the rollout of robotics, whether it's quadrupeds or Tesla has the Optimus and gets it down to a normal thing, or it's Unitree and we're importing them, but we're slapping modules and cybersecurity on the back and trying to catch up. It's a reasonable time to get kind of positioned for it. So we're published a piece that kind of goes through. We straight up tore down Unitree robot, like not the I wasn't not the 16 grand one, but one of the kind of like dog robots, and just looked and we went pretty in depth. But the one of the more interesting parts for me was if I asked you like, what do you think the most expensive part of a robot is? What would your answer be?
The chip.
See that? Yeah, that's what I thought too, right? But
Yeah.
like so Nvidia's Jetson, the like brain of these robots, $60.
Wow.
$60. And so like in the little dog robot, like 66% is coming from like the actuators and like the joints and the screws. The chip is actually super low, and Nvidia has made pretty significant robotics investments. And the crazy thing is like they have this thing called Isaac Sim. If you want to like feel like it's the future, like just like go into a little sci-fi hell, you can go check it out. It's totally free. Any developer can just like go and basically instead of like there's a limited amount, there's a ton of training when you think about like a large language model, ton of training data, right? Humans have been writing for thousands of years, right? So we have a ton of training data for writing. There's not that much training data for like motion and movement and like being a human, but you can take your model robot or whatever and train it in the simulation, and it'll basically train like 10,000 hours of being a robot in like an hour, and it'll go through a bunch of different, like it'll change the domain, it'll change how the lighting goes, and so you can just like go train a robot, and you can train it to do like I don't know, like 80% of things. And then like the other 20%, this is like kind of the interesting, like, we'll like come full circle back to macro because we didn't go too deep into like what macro would look like if we had a bunch of robots, but
yeah, I was going to ask about that because I remember you wrote a piece talking about the potential for like a white collar recession driven by these ideas of ChatGPT and stuff taking out software developer jobs and stuff. But then you're starting to talk about robotics. First thing that my head goes to is, okay, that's sort of the other side of the working class too, of just like these regular like self-driving car type of things. So yeah, what are the implications there?
yeah, that's like so that's the thing. It's this is why we didn't write a ton about like what is the macro impact of artificial intelligence yet, just because it's like there'll be a time and a place for that, and it'll be when it starts showing up in the data. But it's super interesting to talk about where it's like, okay, so like the what are the industries so far that have gotten actually disrupted from AI? I would say that at the top of that list is BPOs and call centers, right? Like you can the technology. I could run a call center on my cell phone right now. But every time you look through history and it's like there's a new technology and everyone says, "Oh God, this is going to make everyone unemployed," and then everyone isn't unemployed. Like whether it's the loom or like textile manufacturing or with like the Luddites or Excel, right? Excel was supposed to put every single actuary out of business, uh, and it just doesn't because humans adapt. And so the interesting thing is like you have all these call centers, and like the call center business is just like it seems absolutely screwed. But you know, most of these are in India. Labor in India is like I don't know, $400 a month, and you have these humanoid robots that cost 16 grand, and they have hands, and you know they can interact with the world, and probably like I said, you can simulate probably 80% of environments and like in structured environments. But like in my house, like my house has a spiral staircase, and it's a pretty unique one, and I don't think that the robot has training to go up my spiral staircase, right? So what I see, and this is like a super contentious point because most people that are like running robotics companies are really like all or nothing, autonomous robot, got to do it. But when you think about like the safety implications and kind of regulation, like, and also the fact that like labor arbitrage has been the driving fact for industrial capitalism for like at least a few decades now. I think that a lot of those call centers are just going to turn into like centers for like these kind of like teleoperated robot pilots, and you're gonna have companies that have like robotics as a service where you pay a subscription for like $500 a month, and there's a humanoid robot that will just kind of like do your dishes and or like mow your lawn or vacuum or whatever, and one robot can do all those things because again the world is designed for human interaction, and there will be a pilot, and maybe in the beginning half the time that robot's active it'll have to be piloted, and as the AI technology gets even better and better, that'll go down and down and down, and eventually you'll have one guy in India that's just like piloting 100 robots because each one, it's like for every 24 hours it needs 10 minutes of intervention. So I think that there are like pretty significant macro impacts to that, but I'm much more focused on like the fact that this is a real thing. The robots are coming, and they have been coming, and the time to invest, I think personally, is now because the I don't think the valuations will get much more forgiving than this.